So hi everyone who is listening out there. So as we are discussing more over the positions, and the portfolio for the next span of maybe 2-3 years of time. I think we already have Lalit and Krishna who are well versed with the thing and who have the cushion to this particular resource. So we would like to know particularly the things from them certainly. Before we move ahead on the topic, since there are listeners who are from the same fraternity, if we can know something from your end regarding the current market scenario, where are we heading, and what is your purview in this context? So over to you, Lalit and Krishna.
Hey, thanks, Priti. I wish I knew the answer in terms of where we are heading, right? And that would have made everyone's job much easier and would have been a case of interest to go ahead, right? But at the outset, the reaction which we are seeing in the markets is how markets have behaved all the while. I have been in the market since 2006, have seen a good amount of downfalls, and every single time there's a lesson which we learn from such downfalls, right? And every single time the lesson is much different. This time also the lesson is much different. How quickly you adapt to the scenario, how quickly you move on. Let's go ahead. The only thing which is different this time, in my view, is there's a non-stop selling from FIIs which is going on, right? Which predominantly, at least, I have not seen in the last 1.5 decades, probably except barring 2008, if we have to give it an outlay. 2011, we saw a FII outflow of some 30,000 crores. But yeah, barring which, there was nothing which is there. We are already, last year was 2.5 lakh crore. This year it's almost 60-70,000 crores, which has been there, right? So such amount of money flowing outside India is huge. Second, the global correction also, which we are seeing, right? So US has already corrected many of the companies over there 40-50%. So there's a lot of margin calls which is getting triggered, and hence more added pressure in terms of what is going on. But look at the beauty. The DIIs have been able to match the FIIs predominantly, at least majorly, right? Today also I was just seeing the data, 5,500 crores sold by FIIs. You have 4,500 crores being bought by FIIs, which is I mean, again, unexpected. And I'm not sure how long will DIIs be able to match, because FIIs are in a pure put way. So we need to see. The only problem is majority of them have not seen the consolidation phase in market, Preeti. Uh, 2017 onwards, whoever has joined market have not even seen what is consolidation. It has been either an upside or a downside. Consolidation will kill 50% of the people just trade, right? Imagine that if we go ahead and consolidate at 16,000 levels for another 6, 9, 10, 1 year, right? People will just get fed up and move out of market. And my belief is that we'll consolidate for a pretty decent time till we start seeing the next up move. Yeah.
Yeah,
Yeah,
uh,
yeah, Krishna, your addition to this.
yeah. So broadly, I think I agree with Lalit in the sense that see, we're in unique times right now. Unique in the sense because we have persistent supply side inflation, and the central banks around the world have already sort of brought rates down to levels where they are unsustainable. So central banks are being forced to hike rates in an environment where growth hasn't been particularly great, and they're forced to hike pretty aggressively. So if you look at the US right now, the amount of rate hikes that they have to do, and the level of rate hikes that they have to do, I think as far as much US history I've studied in the last decade or so, it's pretty much unprecedented. So such a quick rate hike regime, in order to bring down supply side inflation, which is global, which is led by a lot of factors outside of domestic control. Uh, the central banks are being forced to suck out liquidity in order to kill demand in order to bring down inflation. And this has a pretty harsh effect on the markets, because as liquidity dries up, there is usually a flight to safety, which you can see. All the risk on assets, whether it is in the US or in India, have sold off heavily. Even like when you look at um, the NSE small cap 100, or indexes thereabout, you can see the real pain that's going on in the market right now. And this inflation, even with the print that is coming yesterday or day before for the US, and today for India, is still showing that inflation is still strong, and aggressive measures will be needed to bring this down. So it is likely that we are going to see some level of demand destruction that comes about through this inflation, and we are going to be forced to see tightening liquidity, both of which don't create ideal market conditions. That being said, I don't know if it's going to last till the end of the year, because one sort of ray of hope, uh, which I also want to leave the listeners with, is that when COVID began, and the sort of the rebound after COVID began, and the kind of demand that we saw for stuff at home, uh, the supply chains weren't able to handle that demand. The number of ships could not be ad hoc increased. So a lot of that capacity addition um, began its process in 2020 and 2021. We are likely to see in a quarter or two, or maybe 3 quarters from now, the impact of all of that supply coming online. With that, and central banks um, hiking rates and demand going down, we're likely to see a much, much better picture towards the last quarter of this calendar year, or the last quarter of this financial year.
I got it. So since we are talking on the FII datas, so if we talk on numbers, certainly, so there is a small number that I have with me is that despite of the continuous sellings, FII has bought a net of around 2.11 billion dollars in Indian equities. That was between March 30 and April around. So far, till now this April, they have sold around $2.36 billion. But then again, then we have DIIs also. They have purchased around 1.87 lakh crores of equities since October. And so far this April, they have also bought 14 lakh 252 crores of shares as well. So do you think so that this could be of help amidst the selling of FIIs? And since India being an emerging economy, can we see FIIs coming back into the picture, something like this?
See, I mean, obviously, FIIs are not going to, I don't see any other country which is having a potential or an opportunity in terms of silver lining being other than in India, right? Sorry, I have a very bad throat, and hence my voice might look as if, it's been done. Just to link this up with the US market, right? I mean, if you look at the Fed hikes, which you have seen in the past, the last 30, 40 years of data, right? I mean, Fed have hiked rate in the 83, 84 cycle, 88, 89 cycle, 93, 95 cycle. I think 99, 2000 cycle, 2004 to 2006 was pretty big. And then you had from 2015 November onwards till Jan, right? Every single time you study this cycle, you will see that the returns during the Fed hike has been in the range of 25 to 30%, right? So it's just not going to be the case that, okay, a Fed hike or a rate hike is bad for India. You will see similar data for India as well, right? Whenever RBI has gone ahead and raised rates, there has always been an increase in the market, purely because rate hikes is always not bad for the market. It also says that, okay, yeah, there's sufficient amount of demand, sufficient amount of growth which is happening in the system. It's how you read the data. And I see the data from the other perspective in terms of how this can benefit sectors, right? For someone who is heavy leverage, out leverage, it might be bad. But someone who is completely not on leverage and is on an expansion mode basis on internal accruals, right, might be really good. So if I have to purely look at FIs are going to be back. They have no other option. If you say hey, Japan, if you say Philippines, if you say Vietnam, if you say China, I mean China, no one is even speaking these days, right? So you don't have any silver spot lining which is there, Preeti, over here. So in my humble opinion, I believe that they're going to be back much sooner than expected. And when they are back, the inflows is going to be significantly higher than what they have taken out so far.
Yeah, that's what we are presuming, and I believe that as per the data itself, it says that the kind of stability that we have and the policy support that we have for the inducing economic growth, I think probably they have a relatively attractive emerging market, as
Yeah, I
compared
mean,
to any other.
just check this, right? I mean, say the e-way bill which is there, right? Daily e-way bill in April was the highest till date. India monsoon is at normal. PMI is at 57, 58. You had 1.7 lakh crore of GST collection in April, the highest ever. The cess collection alone crossed 10,000 crores. Rupee is still outperforming currency as compared to, say, a Malaysian ringgit, peso, or a Hong Kong dollar, right? So, I mean, you have multiple triggers which are already so positive domestically, right? Inflation might be one trigger on a downside which you will have to keep your risk management in place. But I'm not seeing any other factors which is contra-wise saying that okay, yeah, we are heading towards a big trouble, right? So for that reason, I mean, there's no reason for someone to become bearish on the Indian markets or Indian companies as such. As long as our companies in which we are investing in is continuing to grow significantly higher than what we are expecting, I think our bet will continue to remain as it is.
That's true. I agree to this. Any points on this, Krishna, from your end, so that we can move to another topic?
No, again, I think Lalit and me both are India bulls. India bulls, but yeah, not India bulls. But yeah, I think in that sense, I broadly agree with Lalit, and also the inflation again, like towards the factors that I spoke about, freight coming down, demand going down across the world. Are going to bring down crude prices and freight costs, which have significantly contributed, to this inflation. So while we might see inflation hitting numbers right now, but it's also going to become a positive surprise, going out of this inflationary bout, which I expect to last maybe like another 2-3 quarters before we really see inflation softening. And again, that's me being conservative. I also really think that FIs will have to come back. They will come back, and this time, for once, they will come back at higher levels than what they sold out at because of all this DII buying. It's shown the resilience, it's shown the strength of both the Indian, um, domestic institutional investor, but also the retail investor, because the retail investors also stepped up and bought a lot of equities, held on strong, and even at the end of the day, a lot of the DII buying that's happening is mutual fund inflows, which is coming in through SIPs from the regular person of India. We've had a huge spike in terms of the number of demat accounts. I think we went from like 4 crores in around like 2020 2021 to about 9 crore demat accounts. So huge support has been given to the Indian markets, and the FIs are going to see that there is no market in the world like India, and they are going to come back, because again, PLI support, China plus one, and the demographic dividend all together provide like a set of environments. I don't know when was the last time we saw something like that.
That's true. So, coming back to our topic, probably, how to position the portfolios. So, looking at the current scenario, I think most of us, everyone, have, is having an idea that definitely maybe the kind of market risk that we are having at the moment, and the kind of deceleration in the returns that they were getting in the kind of bull rally that we have seen recently, that the stocks have been 2x and 3x. So now probably they are seeing that they are exposed to the kind of market risk. For now, which they haven't seen maybe in people who have invested maybe in current 1 or 2 years. So I would like to understand, since you both are into portfolios and more of equity investments. So, what is the kind of horizon a person should look into at the moment, looking at such markets? And apart from that, what are the profitable index and allocate? Like how the current conversion has to be when it is coming to diversifying their capital for now.
Okay, so had you asked this question 3-4 months back, Preeti, my answer would have been completely different. Probably I'm sitting in a much comfortable position in terms of answering this up, purely because the small cap index has fallen 27-30% from top, right? And now making a selection is slightly much easier. I don't know, probably many of them might consider it much tougher. I am a contra investor, so I usually go against the trend in terms of making opportunities, in terms of buying, right? And that's the reason I mentioned that at no point of time it's giving me an indication in terms of doing or seeing, because on a 5-year rolling, returns has already turned flat. So we are almost seeing that whatever returns which was generated in last 1.5-2 years, right, is completely washed out already, right? And the pain has been more for those who are much into trading, both positional as well as intraday, right? But for the long-term investor guys, it's always an opportunity to add much more than what they are looking out for. I don't know. I mean, if you are asking me in terms of portfolio allocation side of it, where are the sectors which we are seeing? Probably again being a contra, right? I look at infra, which is something just. I mean, one should see the Delhi-Mumbai Expressway, right? One of the longest expressway in India, engineering marvel. Length of 1,380 kilometers, developed at 95,000 crores, expected to complete by March 2023, right? I mean, it is going to reduce our travel time from Delhi to Mumbai from 24 hours to 12 hours. And mind you, it is consuming 2% of India's annual cement capacity, right? And 12 lakh tons of steel. So this is something, if I have to look from a longer perspective and horizon, for me, things have not still changed on ground level. We closed FY22 with a Nifty EPS of 785. Next year, we'll be doing FY23 at about 850, 870 types. And FY24, we have 1000 EPS coming in. If I have to take a call sitting on today, and if I have to say, hey, FY24, 1000 EPS and 16,000 Nifty, we are at 16x, right? And market will start factoring in at that at next June, July itself for the FY24. So if I have to give a base case P for Nifty or India as such, right, 23-24 is given. So for me, I'm seeing 23-24,000 Nifty in another 18 months, right? Probably you're sitting today, you might laugh at it saying that, hey, look, where is 16,000 and where is 24,000? But sentiments don't take time to change. And every single time we have fallen 25, 30, 35% in such panic deep correction, we have always seen market surprises by the upside. Today, you might feel that, okay, our portfolio is gone by 40%. Tomorrow, it is going to become 2x, 3x. So, having seen those cycles multiple number of times, having learned that lesson, I think I continue to be, I'm not going to say optimistic, cautiously optimistic. I'm not going to use any sort of, oxymoron in this particular talk. I'm straight away bullish in terms of where we are heading. I'm seeing it the larger picture in terms of the opportunities which are available and presented. And I think anyone looking out for that kind of portfolio construction should be continuing to remain bullish. If you are looking at short term, probably I might not be a right person to answer that. You might have another 300-400 points correction. But I'm here to create wealth, or for that matter, all of us are here to create wealth and not looking at profit creation.
That's awesome, and definitely, as you said it very right. The trend does not takes time to change. So probably in a year of time or 2 years of time, we have seen 7,000 to 18,000, and you never know, from 16,000, 24,000 journey can be like, it can be, as you said, 18 months, or it could be 10 months or 12 months. You never know. So, Krishna, as you are also into the same domain, what's your take on the horizon, the capital appreciation, and How about improving the overall proficiency of the portfolio as of now, where we are sitting at the moment in the current market scenario?
See, again, I would say that it has a lot to do with, where we are and how we're going to develop from here. See, we are still at a point where we are facing, heavy inflation, and heavy energy costs. So, in the nearest term, you're going to see a lot of benefit to companies like that. But again, those aren't necessarily the kind of companies that I personally would invest in. But yeah, I mean, in the shortest duration, energy companies are likely to do decently well. Possibly infra companies. We are seeing credit to start to normalize again. So uh, that is a sector which is likely to see some pickup. It has pretty much sat out of this entire rally. So there should be some amount of growth coming in. But I mean, for me, when I look at the opportunity in India, personally, I wanna go in to places where I see mega trends, so to speak. So that would be stuff like digital transformation, cloud computing, building materials, ethanol, to some degree like APIs, anything that's substitution, or like a PLI beneficiary. So these are some of the spaces where I see longer term growth. I don't know if these are going to perform the guys who have been sitting out or who are likely to do well in the next 1 year. But these trends are pretty strong and are pretty long term. So yeah, import substitution, export, CDMO, CRAMS, digital transformation, building materials, ethanol. These are some of the sectors that I personally like. Also, liquor. Premiumization of liquor, another theme that I like. So these are some of the spaces over the long term I see that will do well. This is to that duration of 3 to 5 years. If you're looking for like 1 to 3 years, probably you might want to look at different sectors, something like banking, something like energy, maybe even infra. But 3 to 5 years, this is what I like.
So, Krishna, any kind of rebalancing you think, so that looking at the current market or prevailing market scenarios, so that they can stabilize their current profitability to some extent? Any confirmation or any kind of, however, let me put a disclaimer that we are not recommending any stocks or sectors. It's just a normal discussion wherein we can rebalance or revamp the significant portfolios that you have, so that you can have a perfect blend of cushion towards your risk, and you can adjust your returns. That's it. So any strategy or any kind of rebalancing that you would like to tell for the uh, uh, current market scenario?
See, one thing that even I'm doing, and I'm discussing with other investors, that is also something that's very prudent to do, is to look at is the growth going to slow down in the businesses that you've invested in. So have a look at the top line, have a look at the margins. Lot of businesses right now have had inflated margins or are sitting at inflated valuations. So if if you happen to have like a deadly combination, which is inflated margins and inflated valuation, companies like that are going to get punished in this market, and you may not recover that much on the upside if sustainable margins are maybe like 30% lower than what they are right now. And that can be the case for a lot of companies, um, because COVID has created uh, a different kind of demand from what usually exists. And as we mean revert, keeping an eye on margins and keeping an eye on growth are two things that I would say at the company level to look at a lot. look at each one of your companies. Look at management commentary. Is the management sounding bullish? Is the management, making excuses for problems that may come? So things like that will give you an indication of where things are headed. Uh, Keep that in mind and rebalance, according to that.
Thank you, Krishna. Any inputs from you, Lalit, regarding the rebalancing of the current portfolio or the current investment that people have in terms of components?
No, so like I mentioned, right? Had you asked me this again, probably few months back, answer would have been different. Uh, Probably I would have said a sell call on an IT, which I had given across at that point of time, purely because uh, I don't know. I mean, IT has seen a pretty decent correction in my view. It's again something which is not completely looked against. Let's not forget that every 1% depreciation in rupee is also going to boost margins of IT companies by 15 to 40 bips, right? And we have seen the only two factors where my interaction with the management of IT companies says that, hey, Lalit, look, whatever new orders which were coming in for the last 2 years from European market, US market, now has completely stopped, right? So there's no much incremental new orders which are coming across. Second, the salary costs and other costs have increased and are back to pre-COVID levels, right? So that was one of the major reasons on why ITs, which were historically, should be trading at 20-25p, were at 40p, and you saw that mean reversion happening, and you will always continue to have mean reversions. You can, of course, always avoid, mid-cap IT, selective companies which are going to be there, but broadly, I'm of a view that which is going to be there. Second, there might always be sectors which are completely not looked at, right? And hence, you have all the more reasons to look at. Say, something like a semiconductor industry. You have from design to fabrication to manufacturing to testing been now welcomed in India, right? And India presently is importing close to about $25 billion worth of chips, which is there, right? The government has given 80,000 crores of PLI scheme, which is there, and is going to attract 1.7 lakh crore of investments in India, right? This is one industry which is not even looked at anyone from an investment perspective. So keep your eyes open, more than sector, go for company specific. More so if you are less than 40 years of age, 80% of your investment should be in equity, right? Predominantly, if I have to just give without understanding the risk profile of the person, if that being the case, stick with something on a small mid cap, because as much as diversification is discussed in Indian market, allocation is not at all discussed. At early stage of your life, your allocation to few stocks should be much higher, because that's where you'll make your returns. As you cross a particular age threshold, diversification can kick in. So allocation is much, much, much important than as much as diversification.
A very nice. I think you said that about the allocation. I think we also ignore or escape the classes of securities, the sectors of the economy, and the geographical regions as well while doing the allocations. So, anything you would like to reinstate in this particular matter, that how the market can force the movement of any particular sector or segment in terms of allocation when it is well synced with the classes of securities and economy and any other geographical presence.
Preeti, let's understand this. Every industry is a cycle by itself, right? No one can ever say that an industry is not in a cycle. It's just that some industries are shorter cycle, some are mid cycle, and some are large cycle. You might say a sugar, a fertilizer might be a 1 year cycle. Something like, say, a cement and an auto might be a 2 to 5 year cycle. Something on an IT related might be a 5 year plus cycle. But every single industry is in a cycle in its own way, right? So when you're making an allocation, you're not going to obviously allocate 40-50% of your portfolio into a particular industry, nor are you going to allocate 25-30% of a particular portfolio in a particular stock, right? So you will have to spend a lot of time in terms of seeing which area, or at least I spend a lot of time in seeing, being a contra investor, right? Which sector or industry is on the verge of a cyclical uptick, and for which you see a lot of tailwinds which are going to be there, the changes in the management which is going to be there, the change in the fundamental company financials which is going to be there. But mota moti, when you're looking at portfolio preparation or a portfolio allocation, right, you will have to make sure that two or three stocks constitutes almost 30-35% of your portfolio. I'm going one step ahead in terms of probably telling you what I think in my mind, right? I'm a big believer of not crossing more than 10 or 12 stocks in my portfolio, at least. And I go big in terms of stocks because if you have to create wealth, you can't diversify and have a stock with a 1% allocation or 2% allocation. It doesn't work. It will just not work for you. And if you have understood yourself very well, I think you should be going ahead for the big kill. And then after once you cross a particular threshold in terms of the amount which you manage as well as the age and the commitments which you have, you can always diversify. But if I'm in anyone's place, I will always go for the bigger kill in terms of having a higher allocation in a particular stock than waiting and having a 1% allocation. And even if the stock goes 5x or 10x, I might be right, but I would have not made money. The intention is to make money here than being just right. I have multiple baggers which I can be right, but my allocation to it, if it is 0.5, 1%, it's just not going to change or tweak any of my portfolio allocation.
That's well said. So looking, at the allocation that we are talking about, I think as of now, what should we go ahead with, the growth stocks or the value stocks, and any particular sector that you are eyeing at the moment?
Like I mentioned, right, I mean, I'm a contra investor by nature, so I don't look at growth or a value in a different lens. I go ahead completely different in terms of taking up beaten down sectors, and it requires a lot of patience. I've been, early stage of my life, been a trader, dabbled with money, lost good amount of money at that point of time, then went into momentum, lost good amount of money again, then came in value, pretty much saved in the second cycle. It's the third cycle where I made my money, and that's going to be across for anyone who is coming. We are seeing a lot of new guys who have come into the market. I had tweeted that across yesterday as well. Don't lose hope in market. Market में tuition fee you will have to pay across. That's how you will learn. You can't do a paper trade to say, okay, I won, I lost, right? So being a contra investor, my margin of safety is pretty much taken care. But the only problem is if the stock doesn't outperform, there's a lot of opportunity cost which is involved. When other sectors are running, when other stocks are running, you have a kind of a FOMO feeling, right? Saying, hey, what have I did for the last 2 years? It's a pain in ass. You're often trolled. I've been often trolled on Twitter in terms of saying, hey, this is something completely beaten down. Say something like auto, which has not been even looked at, right? No one is even looking at auto sector purely because of multiple headwinds which are available, visible, EV, semiconductor, chip issues, lack of demand which is there. It's a perfect recipe for going contra, right? I mean, if you have everything good in the sector, the valuations are not going to be the valuations which you are seeing today, right? So not many of them take this contra call in terms of making an allocation. You're often told over there. But yeah, that's how life is. I mean, when you take a call, you'll have to stick to on your neck out and say that, yeah, this will work. If it doesn't work, it doesn't work. There's always a learning which is going to be there, Preeti.
Yeah, that's great. So Krishna, from your end, like what category you are eyeing at, or anything specifically you're looking at, any kind of cyclical stocks, or I am a great believer in a differentiation of growth and a value stock. So any intake from you on this end?
See, I have a slightly different view on growth versus value in India. See, to me, if you get a value stock and yeah, sure, at a certain point it will when growth is getting beaten down, value is going to look relatively better. But we have to remember that India is fundamentally a growth market. People come into India in order to be able to get double digit sort of top line growth even with large caps, and they look for like 15-20% kind of EPS growth. So I definitely believe that India's a growth market. I predominantly am a growth investor. I look for growth, either it has to come in the form of, like, huge tailwinds, so huge revenue growth, or, like, the business is able to expand margin significantly, and therefore you'll have, meaningful bottom line growth. uh, as far as a sector that I like right now, I'd rather talk about a theme, and the theme is, like, the green transition that we're going through right now. It's probably, one of the biggest transitions of this century that we'll experience. The move from, a fossil fuels based ecosystem and industrial style ecosystem, which is extraction based, to one that is more sustainable, and that is more renewable in nature. So there are a lot of, opportunities within that. I spoke about the ethanol play, being one of them. A lot of the stocks in that space have gotten beaten down pretty bad. So you might be able to find some opportunities there. There are tons of opportunities across the entire ecosystem of the green transition. You have to see, what you're interested in, what is it that's exciting you, and sort of focus on that. Within the green transition, you will get multiple different sectors, and these are, like, huge structural tailwinds. So I mean, as an investor right now, you need to be asking yourself, how can I benefit from this green transition?
All right. Okay. So, uh, the kind of quick rundown businesses that green transition business have at the moment. So, any quick picks from you? I would not want you. I do not want anyone to take this as a recommendation, but any quick picks that you have, or any business that you deserve, that they deserve a quick notice probably. So anything in your eye.
I mean, I'm not going to give you any picks over here. I'm not supposed to as well, Preeti. But as a theme, there are two things. One, I'll also answer what Krishna had mentioned, right, in terms of big green energy capital. Let's understand two things. One, business growing big, industry growing big might not turn into companies giving you return. You will have, I have seen the story in 2011 to 2013. Solar, wind were given so much of leeway. In fact, went up to the extent that government gave a grid-based incentive at the point of time, the GBA, right? One rupee which was given. So setup was done great, excellent. Opportunity was huge. You have 140 million megawatt, which has been there at this point of time, right? Yet return wise, nothing has been created from any of the companies. So opportunity might be huge in terms of space which is there, right? But the companies have to also perform better. So while taking a call, you have to also see a lot of other factor variable. I mean, let me take then example of defense sector as such, right? India is the second largest importer in defense, third largest in terms of military spend, right? And yet we account only for 4% of the world's military expenditure, as against probably someone like US, which is 40%, China is 15-16%. Starting from satellites to your drones to your shipyards, right? Let me take the example of shipyard itself. It's a huge market, 4 lakh, 5 lakh crore of market, which is available with a very, very limited.
I think the current mayhem people haven't seen who have come into the market newly, and you guys have certainly. I think Krishna is about to come to complete a decade, and Lalit, you already have spent more than 2 decades for now. So coming from you guys would be a great sigh of relief for people.
Absolutely, I think all I see again is a bigger picture over here, Preeti. I'm pretty much used to in terms of seeing such fall, or probably and every single fall you take an opportunity to build across, right? All you have to keep seeing is how comfortable are you in terms of your valuation. Number one. Number two, is there enough amount of margin of safety for the stocks which you buy? Number three, are you having a quarterly tracking of the stocks which you have invested, right? As long as these three play hand in hand in terms of what you are doing, I think you will be fairly successful and at least generating 18 to 22% return CAGR over a 5-year period, and which is fantastically good. And if someone is probably assuring you or giving you higher, then all you have to do is namaste. Uh, all I look at from a larger perspective or a bigger picture, right? Let's see this. I mean, Apple's market cap is almost equivalent of India's GDP, right? You can't have an aspiration of 125 crore individuals equivalent to a company's GDP. So I see that there's going to be a humongous amount of wealth which is going to be created in this decade. I'm on ground level in interaction with a lot of management, advising them, or many of them, lot of startups which I've discussed in last 1 decade. The way they are working, in terms of being successful, the way they are thinking, and all the while India as such did not have too much focus on R&D. Now we are seeing a great amount of R&D being there in India as such, right? So you'll see a lot of positive results, and the base effect is way different from what we had last 2-3 decades vis-a-vis what we are going to create in this coming decade.
Got it. And I think Indian markets will definitely outperform. So that is the key point people should understand in terms of horizon that they're holding the stocks. It's just that the fundamental factors have to be studied meanwhile. So any confirmation on this front, I think people generally give an example that X stock has given 10x or 20x or 30x returns, but people don't compare the kind of plummet some stocks see because of the flaws that the company have. So anything on this particular risk reward or the kind of studies people can perform for their long term portfolios to be in.
Krishna, you want to add in anything? I'm going to, of course, share my views.
Sure. I think what's really important to understand is that a lot of great companies often go through periods of drawdown. They're not they may fall less than the market, but they're still going to fall. And if you look at the history of markets, you'll see that many times, in fact, there is some data. I'll try and put it out on my Twitter handle afterwards. But it generally says, like, every 2 odd years, 2 to 3 years, you see a correction of about 20%. Every 5 or 7 years, you see a correction of 30 to 40%. So corrections like these are part of the course. What you need to make sure is that um, every business has its cycle, like Lalit was pointing out. Each sector goes through its business cycle. What you don't want to be caught with is, like, at the peak of the cycle, there's a lot of euphoria around a lot of the names or a lot of the leaders in that cycle, and you don't want to be caught when the cycle is changing with businesses that you've bought at really high valuations, um, and which are unlikely to have the same kind of business performance going forward. So again, I would say that keep in mind, not what the stock has done, but where is that company headed. And if you can get a sense about that, as a fundamental investor, it is your job to try and understand where is the sales headed, where is the margins headed over the long period of time, and are there any adjacencies or organic opportunities for growth that might arise. And as long as you uh, keep in mind that the market is a discounting mechanism, so you are going to get opportunities from time to time if the future is not so clear. But all you need to do as an investor is study the opportunities available, understand what you're paying for it, and balance that risk reward through portfolio construction. So I'm not as concentrated as Lalit is, which is 10 to 12 companies. I prefer something more along the lines of, 18 to 21 companies. That's sort of the range that I like to be in, with about like 20-25% of my portfolio being in sort of more aggressive bets, while the remaining 70% gives my portfolio stability. So I think for each person it's going to be different. But yeah, you don't want to be invested in 50 stocks with 1%, because you need to keep in mind how many companies you can actively track. And like Lalit said, and I also firmly believe that really small allocation don't lead don't lead to outsized returns. So it's important to keep that in mind. But before we move on, I just want to ask Lalit to sort of complete his point that he was making before the space crashed, which was, we have these big themes like defense, like green, and perhaps I should have spoken a little bit more about the fact that everything in the space is not going to do well. But Lalit was making an interesting point about how to find, or what are the other factors to look at within a theme. Maybe you can complete that point.
Yeah, sure. Right. I mean, see, for defense, what I was just mentioning is India is the second largest importer in defense, right? Third largest military spender. 4% is what we account in terms of the spend which we are having, whereas US 40-42%, China 14-15%. And defense has multiple sectors. You have satellites, you have drones, you have shipyards. I just took an example of shipyard. It's a huge market, 4-5 lakh crore, which is available with a very limited set of players. Let's not forget that if I go ahead 20 years back, India used to be a defense importing country with 70-80% of foreign acquisitions happening, and indigenous projects used to be just 15-20%. Now time has completely reversed. You're seeing 50-60% being indigenous and 20-25-30% being target being given, right? So it brings in a lot of potential for companies who are betting in it. Market might be big, huge in terms of doing it. There are limited set of players, BL, HL kind of stuff who are there, right? You will have to find your bet in terms of which are all the top 1-2 players with whom I'm going to stick on to a particular theme and do it, right? Similarly for electronics, right? I mean, in electronics, again, it's a huge market in India, 160-170 billion dollars, growing significantly 10-12%. Let's not forget, again, we are importing almost 85% of the import is happening from China, right? And other countries which is there. So it's a big market in semi knockdown units which we are seeing, and you have good amount of IPs which is going to get registered over here. So again, these are all the themes which you can always play. Stick on to the top 1-2 player because that gives you a enough amount of comfort in terms of corporate governance, which is going to be there. Having said that, portfolio के अंदर when you are having 11-12 stocks, you can't have everything and anything. You will have to stick for the story to play out, right? And always, I mean, your job is in this 11-12, 3 should become multi-baggers. 6-7 will give you something like 20-30% CAGR, and 2-3 will definitely become zero. The best of best mutual fund guys had investment in DHFL, had investment in Yes Bank. So if someone is saying that, hey, I am Doodh ka dhula, and I am going to bet on companies which are going to become multi-bagger, he's just lying outrightly. There will always be investments which will get zero. It's just that you will have to learn lesson. The lesson, once you learn, it's just that you will be able to come out from the pain much, much early than others who are waiting for a 100% erosion, right? You see a 20-30% pain, you see the management not performing, exit. As simple as it is. You see good amount of your portfolios going up, don't have a urge of selling across. I had a detailed thread on Twitter where I put across 15-17 points in terms of when one should take a call for sell. As much as we discuss buy, no one even speaks on selling, right? Selling is as equal as possible. I have my good friend Deepak who is also listening on this call. He knows, being a trader, right? Selling is much, much more important than buyer who is going to be there. So I think those themes you need to select across, build your portfolio, have probably a quarterly review or a 6 months review, which is going to be there, and see if those themes are working out. And if those themes don't work out for 2-3 years period, I think you will have to take the hard call of moving up. Sorry, Preeti, I think you're on mute.
Yeah, I can't hear Preeti, nor can I hear Vishnu. I think we can only keep the conversation going till then.
Yeah, I know. I mean, that works much better.
Cool. Yeah, I think I broadly agree with what you said about looking at the themes, and also uh, there's a lot of echo feedback coming on me. Let me see if I can do something. Yeah. So, I broadly sort of agree even with that. You are going to have a few winners in your portfolio. A large majority of my returns over the last, 5 years have come from these 3 to 4 to 5 companies, which have executed really, really well. And we have to keep in mind that Pareto's principle is going to play out. So 80% of your returns are going to come from 20% of the companies. But it's our job to see within the themes and within the exciting opportunities available where you can dive in and construct a portfolio, and again, across your portfolio, manage that risk and reward.
I agree with you, Krishna. I mean, my personal experience, and that's the reason probably I would, I keep saying people, hey, focus on more on small cap, mid cap companies if you're at early stage of your career or life, right? Predominantly purely because for large and mid, you already have what mid is more than 8,000 crores of market cap, right? There are hundreds of reports, which is that the story is almost over because it's almost identified by everyone. You don't have too much of returns being generated over there. All your efforts should be made to see a small cap move to a mid and then a mid cap move to a large, right? And not often you get to see this purely because the base is small. It is easy to prove for a small cap company to become a mid. The mutual fund institutional holdings, they don't have mandate to even hold. It's usually a mandate of more than 3,000 crores of market cap, which they look at, right? So we have good amount of companies in the bucket of 300 to 3,000 crores, which is often not looked at, which often no one sees. And I am of a firm believer that at least I have majority of my portfolio has performed really well. And these are all the stocks which have given me 5-10x return, if not a 20, 50, 100 bagger stuff. At least a 5-10x has been easily made from that particular bucket. So pretty much important to construct the portfolio in such a way that you have decent allocation at the early stage of your life in good, decent small cap and pretty decent mid cap.
Yeah, absolutely. I also broadly agree with you. My portfolio construction is a bit similar. So, about 70% of my portfolio is in small cap, and the remaining 30% is split between mid and large. What is large has used to be mid, it's now become large in my portfolio, which is a good sign. But broadly, I try and split like 70% of my portfolio being from 2 to 10,000 crore market cap, and then the remaining 25-30% can be in the range of like uh, 500 crores to 2,000 crores, which is slightly requires a lot more research to be done, but again, the payout can be proportional. So yeah, being 29 myself, I see the value in doing that, and really really excited to hold these companies into their maturity to see what they become.
Yeah, pretty much. Preeti, are you back?
Yeah, I'm sorry I missed the middle of the conversation. However,
You
I
missed
think
the most crucial part of the conversation. You
I
must
listened. I
the
listened to the
story.
recording probably. But again, since we were talking about the portfolio allocation at last. So one small thing I would like you guys to add on here is that since now after this extended market rally, I think most of us have invested at peak, and I think the allocation of their portfolio might be at maybe at the ratio of 90s to 10, maybe 90 in equity and 10 into the any other kind of bonds or any other fixed income allocation. So what is the current shift people can make, and what is the kind of risk tolerance people can keep in, so that it can out favor their securities at the moment?
I mean, Krishna might be the right person because I might speak morely from a self perspective. So, I mean, like I mentioned, right, if you're looking at, you have to look from a goal based, target based, return based expectations, right? My return expectation might be substantially different from what it is there. But like I mentioned, right, in case if I'm preparing a financial plan for a client, and if I see if the client is age of less than 40, right, I usually allocate a 70-80% allocation for him on the equity side of it. You have to break it into multiple. In the 70%, 80% equity, you have a large, mid, small, micro cap kind of stuff. You have income, value, momentum, growth, cyclical, speculative, defensive stock, blue chip stock, and then you have, I mean, multiple segments in terms of equities being there, gold being there, debt being there, hybrid being there, something like crypto has also been there, right? So it's all end of the day matters on allocation which you are making, basis on the risk profile which you are having, basis on the goal which you are targeting, right? So all three of this is interlinked. I personally do a review of my portfolio in a quarter on how it has performed, how it is targeting, is there a rejig which is required. I usually don't hesitate in terms of having to do any rejig and accept that, yeah, I have missed my analysis in terms of how I have understood the situation vis-a-vis how market has reacted to it. So there's always a case. Contra obviously takes a quite longer time in terms of performing. I got Indigo probably at a time when every single PMS and every single mutual fund was selling in the market, and it took me some amount of time to even sit, realize, and see how the market is going to revert back when traveling is going to be there. I took Delta Corporation when every single casino was closed across, and people said, "Hey, people are not going to get back to casino. Forget about going to casino. People don't have income to even eat food, right?" So when I go and get into extra calls of such size, right? You are the only lonely person who's sitting on betting on something which is completely hated by the market. Uh, Tough time, tough place to be in. But yeah, that's where maximum returns also comes across and give you a higher risk, higher reward kind of returns.
So Lalit, nice catch, by the way. Right now the market is in fear mode, and probably people are at a mode wherein they are on the verge of getting a very secured kind of investment. But as you said, you do a contra bet. So what are the current attempts you would like to make at the moment, or what are your choices at the moment? I would not like to take the names, probably. If you are comfortable taking any sectoral view or stuff, that would be great.
Interesting. Again, I mean, when you are just contra, it's not that contra because a stock or industry or a stock has fallen, you go ahead and buy it, right? It is just not.
No, so anything in sub asset class, or anything into
Take
commodities
something
or
like
stuff.
take something like a gold NBFC, Manappuram or a Muthoot, right, which has not been even looked at the market. They continue to have pretty decent market share. Banks have, of course, dented in terms of doing it. You have Manappuram, which is now some 110 rupees, right? So, which is completely not looked at. Something sectors. You have PSU banks. I don't know. I mean, people hate it. When I speak on PSU banks in the last 2-3 months, I have spoken about it. I think the worst is over, is what SBI chairman keeps saying, right? I'm of also a similar firm believer, purely because data points suggest that it is over. There's a good amount of realization which has happened. There's a separate bad bank which has been created. There's a good amount of NPS which have been done. You will see a good amount of credit growth uptick which is going to happen. I have a lot of my friends who are working in the banking industry. They give me a lot of green shoots, data points in terms of how the industry is turning around. Infra, I have already spoken on. I'm highly bullish on infra. Again, a sector which is not looked at. It's a dirty industry, mind you. So it's not easy to play across or find across players in this industry where the company might make good, do a decent business, but for shareholders, the returns might be, hardly nothing or a negative returns, right? So you'll have to again select companies on the basis of corporate governance. So infra might be something. Power might be there. Power, there's a lot of bets which can come across from, say, prepaid smart metering or a feeder separation which is there. Let's not forget that there's a delicensing which is happening in the distribution business and power sector, right? Which is nothing but you will allow more than one company to operate in a particular state. And also not forget that AT&C losses for the last, for the entire sector is close to about 22% as compared to, global average of 7-8%. So there's a good amount of consolidation which is going to happen moment delicensing is going to happen. So you have individual bets which you can take. Having said that, when you're selecting a 10-12 stock portfolio, you don't get a liberty to select across multiple stocks. I usually go on for a player number 2 or a player number 3 in that particular industry to check across. Credit rating might be one area which is completely not looked by the market. It's just that there's a lot of consolidation which is happening in the sector. But I see again a lot of them who are going to take new loans in the next 5-7 years. There's good amount of business which is available over there. The sector will get tightened up, but yeah, there's a good amount of visibility which is clear over there. So yeah, I mean, you have sectors, power, infra, gold, NBFCs, banks, PSU banks are private as well. Defense, I have already spoken, electronics, semiconductor, multiple sectors which is there. Specific to companies, you will have to select. Preeti, you're on mute. I don't know if you're able to hear us back.
Cool. I'll just add in my thoughts till Preeti comes back.
Yep.
So, I would like to take the sort of contra bullish view a little bit away from, domestic equities into international equities. Right now, the NASDAQ has been beaten down pretty bad. Big tech has been beaten down pretty bad. I mean, when I look at something like Facebook trading at 14 times, earnings, um, able to give you double digit sort of revenue growth, double digit EPS growth, and even higher free cash flows. Businesses like that, businesses like Google, available again at around 20 times earnings. There are a lot of opportunities in that entire basket, in US stocks, and now you have the ability as an Indian investor, assuming you have the portfolio size and the risk appetite to go into it. International has opened up, and there's a lot of opportunity there. Because unlike India, they don't have circuit breakers there, and they have a heavy prevalence of algorithms. So when selling is triggered, that selling gets exacerbated multifold whenever there is fear and there's panic. And we seem to be at like absolutely crazy valuations. None of these are like stock recommendations, but just, I mean, if you look at Amazon's market cap today, and it's still absurdly high when you look at it in absolute terms. 1 trillion, like being north of $1 trillion. But when you look at the fact that its largest business within Amazon is actually AWS, which is growing at 37% year on year, on a huge base, you're almost like the valuation of that business alone is enough to cover what you're getting the whole of Amazon for. So everything else is, pretty much like either heavily discounted or you're getting it for free. So I would say, to look for a contrarian call or to look for something where there isn't enough interest going in right now, I would say look at the US markets, specifically US tech. You can go right from the high growth spectrum all the way up to big tech, depending on whatever you're more comfortable with, whatever you're more interested in. But there are a lot of opportunities available for sure.
Great. Preeti, so we have spoken almost for 1.5 hours. I think it's time that we should take some Q&A if there is any, so that, our listeners have been listening for last 1.5 hours. We are open for any sort of Q&A. Vishnu?
Yes, sir. I'll just add. So, anyone who have any questions can put over here. We'll just start here. So we have a request from Santosh. I'll just add as speaker.
I'm sorry. I think a lot of technical glitch today, and I'm being on and off. I'm so sorry. I've missed the most of the conversation, but the value addition has been great. So yeah, taking the questions for now.
So, Santosh here. Okay. Thanks, Lalit, for explaining your views and your methodology of investing and all. Been a follower for a long time in Twitter here, right? So you talked about, how you bought the Delta Corp when everyone was ignoring it, when everyone was getting out. So similarly, we see now many such names floating around, like, be it pharma or API kind of a players, right? So what would you make out of it? Would you see similar opportunity there? See, Newland, it was at 2,700, now it is at somewhere in 2,000. And many such examples, I can give a lot of examples. What do you think of them? I mean, like, I'm sorry for, cornering you into a particular sector and particular names, but what do you think? Do you find any such names now?
I always have some or the other names which keeps coming, Santosh, right? And you always have, against every fall, you have names. It's just that market finds reason. Just like we have Delta Corp today, you might say probably a pharma which is getting beaten down, right? Let's not forget that US FDA is visiting India, a lot of pharma companies after a gap of almost 2 years. And the FDA letters have just started coming in. You had Sun Pharma, which came across, you had Glenmark, you had Lupin, which is there, and you will see many more mid-sized pharma companies, where there's going to be a good amount of FDA. I have been a contra investor 2016 ke andar I had invested in Sun Pharma. It took so much of my patience, energy, where 2 years the halal plant did not get the approval for the FDA, right? Despite management saying every quarter on quarter saying that no, we are going to get this quarter, we are going to get this quarter, and I had to finally give up, right? And I had to dump that across at that point of time, because that's how painful it is going to be. Because FDA letter aane ke baad mein, it takes a lot of time. Sequential steps are there for you to go ahead and get a clean sanction, right? So it's not going to be easy. Until then, you don't have any growth coming in, because majority of your exports is anyways going to be for UK, US, European countries. So it's a big pain in the ass if you have been in a sector. So you will have to select those stocks which don't have such kind of US FDA related pressures, right? There are always sectors which correct across, or you might find a theme. Say a theme like a privatization theme which might be there. I have seen the 1999 to 2004 kind of stuff where 10, 12 PSUs at that point of time were privatized. I don't know, you might not even remember the name. Bharat Aluminium, CMC, Hindustan Teleprinters, Hindustan Zinc. So a lot of them got privatized at that point of time. You saw almost 235 PSUs being there. And I'm literally fed up at this point of time of government's incapability of being able to privatize BPCL, which is stuck for last 2.5, 3 years. I mean, it's stuck almost for 8, 9 years now, but predominantly I expected it to be much faster because if you're not able to sell across something like BPCL, forget about then going ahead and doing something on sale, BHEL, Engineers India, right? So I think government has miserably failed here. I had bet across on privatization theme. I'm probably losing my patience because I mean, in a bad market now, even selling across and then waiting across is going to take a lot of time. So it's a tough call, Santosh. It's a very tough call. You might get it right at sometimes in terms of what you're betting across, but majority of the time there's a lot of pain also which is there. You'll have to live with it. Then there are always bad companies which keep coming, the like of GVK, GMR, Lanco, Suzlon, IVRCL, BGR, and then there are fancy stories which keeps coming. Say something like a Bombay Dyeing, where I'm going to demerge my real estate. I'm going to demerge my real estate. Every now and then you will get hearing, right? Anant Raj might be another player. So you will have to live with it. You will have all stocks. I had just put on Twitter yesterday a list of 250, 270 companies which have corrected more than 40% with a market cap of more than 1,000 crores, right? Now you can't say that, oh yeah, if it has corrected 40%, so it gives me a contra opportunity to bet on. Frankly, when I was going through the list of the 250 companies, I found 7 or 8 companies in an investable position. Was able to track some 15, 20 companies which were reasonably okay. So, I mean, that's how brutal it is when companies fall. That's part and parcel of cycle. And that is going to be as it is now as well. You saw all the new age tech startups getting beaten down left, right, center. More is going to come. Delivery is getting close, and I think it's close today already. 38,000 crores of market cap at 800 crores of loss. Some atrocious valuation, which I had pointed out. You will see much more pain in these kind of segments. Now, if you're going to go ahead and say, okay, Zomato, Paytm has corrected 50-60%, now it makes an opportunity. No, it does not at all. It will never. You can be a king in a private market. In public market, it's only cash flows, and cash flows. Anything apart from cash flows, you'll be dead. It's just that this market will take its time, to pain or give you that pain. But if you're tracking anything else apart from cash flows, you're gone. So stick to it. Stick to fundamentals. Keep focusing on cash flows. Keep seeing on trends, themes which are coming across. Give an allocation for 5, 7, 10% over there, which you believe can go big. Yeah, I mean, I have been following that.
Thank you, Lalit.
Vishnu, any other questions?
Yeah. Hi everyone. So we are open for the Q&A session. So if someone is having any questions, you can send a request to us.
By the time any other questions, Krishna, tell me this: what's been your take so far? Right, in the last 3, 4, 5 years, you have been in the markets, right? 2017, so you have seen a demon, you have seen GST implementation, you have seen some kind of attacks which came across. You saw COVID. You saw the pain of 2018, 19, and small cap, mid cap kind of stuff, where 2 years literally nothing came across. And now you're seeing Ukraine, Russia, right? So I think all you have seen is a lot of events which have happened. So, from your experience, your view, how has the journey been so far? What are your 2 major learnings over here?
Yeah. It's been really interesting. It really shows you how resilient our Indian entrepreneurs are, how strong they are. That despite all of that, they continue to grow, they continue to perform exceptionally well, and they continue to compete on the global stage. When I look at a lot of these macro risks or things changing from now and then, you understand certain fundamentals about how the market is structured. And these could be which sectors are susceptible to oil, which sectors are rate sensitive, which sectors don't have pricing power within these. This could be either the sectorial level or at the company level. So I think I like to be a top down investor, so I like to look at what's happening in the macro, what's happening on a country level, but I also look for businesses that display some sort of competitive advantage. Now this competitive advantage could be in the business itself, or it could be in the moment in time in which we are in. So the business itself would be like Michael Porter's five forces. You look at companies which are able to uh, grow market share. They have pricing power. They're able to elbow out competitors. But it's also stuff like where everything comes together at the right time. Like an example of this could be something like Zoom. Now, of course, Zoom wasn't able to capture, capitalize on it and take those cash flows and build it into something more than just a video chat platform. But the example of that, like now, there might not be a sustainable competitive advantage there, but for a period of time, a year, 2 years, 3 years, 4 years, 5 years, businesses like that could really, really outperform. So yeah, one of the things that I've learned is that look for something where either the business itself is extremely resilient or they have massive tailwinds. And second thing that I've learned is that you know if you don't have a margin of safety, फिर पिटाई तो होनी ही होनी है. Like you have to look for margin of safety, and try and look for something that's a mix of both narrative and numbers. Because if you go for something that's only narrative, then it's not going to at the end of the day show up in cash flows. And price to story companies get hammered really, really badly. And at the same time, when you look at companies uh, which are only numbers and don't have the ability to um, recognize opportunity and go for it, and get into emerging areas, like companies like that are made obsolete over time. So I think these are some of the learnings that I've had so far.
Very nice, very nice, very, very good. Vishnu, probably we can take a question or two, and then
we
have
do
a hot stop at 10:15. Yeah.
Stock market scientist with our next question.
Hi, good evening, everyone. So it was very nice to hearing everyone, like mostly Lalit and recently Krishna. So actually, I have been in market since 3 to 5 years, and I basically, I'm a kind of momentum investor. So what I found that for me, mostly I look for the company which are continuously giving the consistent profit. Like I generally see the sales and the EPS, right? And how the EPS of last 5 years. So basically, what happening that right now, since this crash is happening since last 1 and 2 months, so a little bit, my strategy is not working at all in this sort of market. So I'm a little confused that whether I need to improve on my investing part, like that Krishna is mentioning about a macro and how the we can correlate with the prices, which company is affected by mostly macro factors like oil pricing hike or inflation rate. So I just wondering that you guys can recommend me some sort of books or something that I can broaden my knowledge in those areas, because I'm very good in momentum kind of setup, but I want to understand much more about fundamentals to correlate with my momentum investing. So can you please recommend me some sort of good books about it to start with, to learning about this macro fundamentals?
Sure. I think there are a bunch of good books that are available. You can look at, if you want to understand valuation, you can look at something from Ashwath Damodaran. Um, there is Dando Investor by Monish Pabrai, which goes over a more fundamental sort of stock picking style. You can look at, if you want to go into the really really strong competitive advantage kind of companies, you can look at books by Saurabh Mukherjee. And if you want to learn more about, tailwind based investing, I would also suggest you look up, not only the book is Joys of Compounding by Gautam Bed, but also look up his videos, because it's something that he practices often. In fact, I've hosted him on Twitter Spaces, so you can just go to YouTube or on my Twitter profile and look up, the discussion that we had, and
Mm-hmm.
see from there. Lalit, you want to add anything?
I think fairly you have covered across. I mean, going deep, you might have something on a Peter Lynch learn to earn kind of stuff, right? Orbiting the Wall Street, one upon Wall Street, you might have. But yeah, for someone who is beginning across, what you have mentioned is right, and more so from an Indian perspective, you have rightly mentioned the books which one can always look. Probably Santosh Nair's Bull, Bears, and Other Beasts might be one addition which I liked purely because it gave a good amount of history in terms of what used to happen in 1990s to what we are doing now, right? So that can be an additional book.
Yeah,
Yeah, thank
definitely,
you.
very good one.
Yeah, sure. Thank you. I will look forward to getting those books, and definitely I will look going to show those video on YouTube. Definitely. Thank you so much, Dalit and Krishna.
Okay, so we had one question, but the user is missing right now. So I think we can wrap the space right now.
Perfect. Should be okay, Vishnu. If there's nothing else, then this is good, great 2 hour plus interaction which we have had.
Yeah, I just want to thank Lalit and Rigi for putting this together. It's been really really awesome, to share the stage with someone with 2 to 3 times my experience in the market. Learn from his experience as well, and share whatever insights I've been able to gather over the last couple of years. So look forward to doing this again, and thank you to Lalit, Rigi, and the audience for showing up.
Same here, Krishna. Thank you so much. Yeah.
Thank you, everyone. Thank you, Lalit sir, Krishna sir, for sharing your valuable inputs. I hope for the listeners it was very informative. So we'll do more such sessions so that we give more inputs to everyone. Thank you, everyone.
Yeah. Thank you, everyone. Good night.